Welcome to another edition of Brian's Big Idea. I'm Brian Boland. I'm the aggressive growth stock strategist here at Zacks. And today I want to talk about the generalistic idea of investing and how the Zacks rank helps. And then take a look at one of our wonderful services here at Zacks. And, the hardest thing in the world to do in investing is picking the good stocks, right? And just because you think you got a good name doesn't necessarily always mean it's going to be the case. So sometimes you want to take that idea of individual stock risk off, and maybe you just want an ETF. That's what we'll talk about later. But first, let's go to three stocks that have been performing lately, and we'll take a look at all three and see what I'm seeing. All right, first one is Celestica. CLS is the ticker. You can see it is up big today. It's up $32, 18%. It's a Zacks rank number one. It's a strong buy. B for growth, C for value, and a $20 billion market cap. The company just reported earnings and posted a beat and raise quarter, I believe. So as you can see from the chart here, this thing has just been in that 45-degree angle, up and away, nice and safe. And things like this are safe until they're not, right? But right now, things definitely look good for the next 3 months for this company because as a beat and raise quarter goes, you have provided 6 months of good news in one day. The last 3 quarters were better. Last 3 months were better than expected. The next 3 months are going to be better than expected. Let's just take a look at some of our numbers here for this stock. We can see they beat the number a little bit, but really on the average, but they did much better most recently here. So it's good to see beating the number. Let's take a look at our estimates. Now, our estimates have not moved yet because the company just reported last night. We got to get these estimates in, but we can see they're holding steady with a little trickle up here for this year and a little trickle up for next year. And finally, we're going to take a look at growth. Yeah, I like it already. So we see 13.4% growth this year, accelerating to 16.5. Plus, this number is going to go higher because they raised guidance and a beat. They beat and raised. So those are good things for Celestica. CLS is that ticker. Let's show it to you one more time. It's Zacks rank number one. All right, let's go to the next one. It's Whirlpool. And Whirlpool kind of going down the drain today a little bit, down $10, 10%. They reported earnings last night. Wasn't so good. So a couple things about Whirlpool. Okay, it's Zacks rank 3, F for growth, B for value. So growth is challenged here, and that is a difficult thing. And obviously they make the household appliances. And I heard anecdotal stories about washing machines, drying machines being very aggressively priced from Whirlpool. And this stock was also touted as one of these anti-tariff plays. And I think that came out like in June. This is an anti-tariff play, and the stock ran up, but has come back in and has gapped back down to that $80 range, $90 range, shall we say. Most of their products are made domestically and sold domestically because the rest of the world buys those cheaper versions from, there's not that much technology in them, right? And that's the reason. And we got to mention this, there is a big 7% dividend on this stock. So your value players and those dividend and income investors are looking at this stock saying, I'd rather just stick with it for a number of years. But if we take a look at that longer term chart, and if we could back this up, this stock was $250 a couple of years ago. So it has been coming in. If that was your plan a few years ago to have a big dividend stock, you've lost half your capital, but you're still getting a big dividend. So always a concern. All right, well, let's go to the numbers that we look at, and a beat and a miss and a bigger miss. That's not what we want to see, even though this is tariff-free, or so they say. So estimates trending down to, we can see that's down just a penny, 841. That was 868 just a bit ago. And then 1026 just a bit ago. That's coming in too. But they're, it's not like this company is going to die, but it's going to be contracting on the revenue side. It's going to contract by 6.5% and then just be flat next year. So it could be another year of dead money for Whirlpool unless they figure something out. All right, finally, let's go to Wayfair because it's just what you need. Wayfair, the ticker is W. It's a Zacks rank number one, strong buy. B, growth. D, value. Almost $9 billion. And look at this chart. Nice. I like to see that just up and away. And lots of commercials. I know that. And they're reporting soon, coming up Wayfair's get just what you need. Does the stock give you just what you need? Well, they had a gigantic miss, which skewed that number there. I'm going to delete that so that you can see it. So this is a big time miss, but it looks like most is forgiven as we see their performance last quarter. So the estimate was for a loss of 18 cents. They made 10 cents. That's a great turnaround from when they're expected to make money and lost a bunch of money. All right, so what are the estimates doing now? They're looking forward to 32 to 34. That's up in the right direction. 9 to 10. That's up in the right direction. 59 to 65. That's good. 21 to 27. That's good. Maybe that arrow is a little excessive, but it's still good. Here's your end idea for this stock. Okay, we're going to be flat on revenue this year, but 4% next year. And then it all comes down to what's going to happen in terms of this coming quarter, but it's coming up pretty soon. So it's Wayfair. All right, so that's 3 examples of stocks that are, pretty big names. Sometimes you make it, sometimes you miss it. But if you want to take that risk out of the market, we've got something here at Zacks. It's one of our great services. It's ETF Investor right here. And it is run by Nina Mishra, and she does a great job. And this is kind of a macro perspective and a long-term strategy buying hold. So you can see her top 3 names. She bought them in 9 years ago, 8 years ago, 7 years ago, 6 years ago, but they're up hundreds of percent. So this is kind of your strategy. I'm just blow through her portfolio. You can see she's got all different types of ETFs, all different types, and they're all green. Nina doing a great job. She gives it commentary, what looks like just about once a week commentary, what's going on in the markets. So Nina does a great job with that. She gives you all that good information. And with the market at all-time highs, it makes sense that her entire portfolio is up there and green for the most part because she has diversified out of the most risky areas and continues the buy and hold strategy, and it's paying dividends. So it's a great idea for the long-term holders to look at the ETF investor portfolio. That's it for this week. Be sure to join me next time when we look at a few stocks and another great service here from Zacks. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.